This is Eric Mother.com with about 2 minutes to go before the close of session for the week, for the day, and also for the month. This is weekend market analysis for June 29th and June 30th, 2019. Markets closing pretty much at the highs of the day, as we can see here. But the main takeaway here is that as we end the month, we are going to pretty much have to consider some of the big picture look and the setup for the market going into the new month. All right, let's begin here with the S&P 500. And depending on where the market is going to close, let's take a look at the closing numbers in terms of, assuming the market closes around here, is S&P 500 on a weekly chart. We can see was doing its best this month to break out above the recent 2019 weekly closing high, and the level there is at 29. There is your market close for 5.64. So the market needed to stay above that level and to close above that level if this was going to be a fresh all-time weekly closing high for this week. So let me go ahead and refresh that. Now that the market is just closing there, we can see the numbers are settling out. End of month, and I believe also end of the quarter, end of the week, end of the day. All right, stick here. Let me update the chart here, see where we close, end of the month here. So let me go ahead and update that just one more time so we can get those closing numbers for the S&P 500. So based on the breakout attempt, we can say that this week was a failed breakout week. In other words, there was no follow through from last week's close. And so again, we see ourselves closing below 2945.64. So until the market can clear this level, it looks like this is going to be an area of struggle. Of course, bulls want to see the market take out that price and continue marching forward. Otherwise, bears are encouraged by this lack of momentum. And as long as we stay below this price, looks like we could be setting up for movement lower as we begin the new month. So a breakout is needed by the bulls. Of course, bears would be happy to see a failed weekly breakout. We can also see something similar on the daily, where we see that there was a breakout attempt that seems to have run out of energy as of right now. Of course, this could always change. Go back to the highs of late April, early May, and we had spent some, I think, a day or so above that price, but subsequently this has turned into a failed breakout as of right now, and that level that was a prior all-time daily closing high for the S&P 500 was 2945.83. So these are the levels I would watch. Of course, it would be bullish if the market can clear this level and advance beyond that level. In other words, a breakout is needed if this market is to continue higher. And as of right now, the more we fail to hold above this level, the more we start drifting lower. That would be looked upon as being a failed breakout, and we know that failed breakouts are notorious for taking markets lower. Also, we see that on the monthly for the S&P 500, we can see that go back to this close end of April 2018. Just do it like that. We can see that this is the level to watch on the big picture time frame for the S&P 500. S&P 500 would have to clear that level if it is to move beyond, with a monthly breakout of 2945.83. which goes back to this close here again, end of April. So these are the challenging areas for the market. If the market is to move beyond current levels, it has to take out these levels. Otherwise, failure to do so does mean that the market is due for some type of a pullback. Of course, let's not forget that this past month we've seen a nice move in the market. S&P 500 for the month was up about 6 to 7%. That's a big move, and if the market cannot hold and break out successfully, we are going to see a change in sentiment, and we're going to be due for a big down quarter, a big down month as we move forward. That's a short-term outlook. Otherwise, those are the levels to watch. The rest of the video is for paid Muadhi.com subscribers. Enjoy your weekend. Peace. For subscribers, let's continue on.